Never in my wildest imagination, I actually thought that we'll be managing 500 crores in 5, 6 years. Yeah. So that
Fantastic.
is how it started. Yeah.
Tell me about your as a fund manager. Which were your most wonderful uh, moments? What were your wonderful moments? I'm not talking about ideas. We'll come to ideas later. What were those one? There'll be some wonderful moments which you experience as a fund manager. Tell us something about that.
Yeah, I mean, there are. I've had my, like, at least I've realized investment management industry is extremely tough, and we have all had. At least I've had my fair share of ups and downs in last 6.5 years. Had a brilliant 2017, which was just the second year of when I started the fund. So had a great start. Then had like very average 2 years, right? Because small caps didn't do well. So I think I think two of the two of the best things that I kind of remember is and which I'm very happy about is one of my close, I would say, somebody who I used to work with, Manan, uh, kind of joined us, not kind of joined us as an analyst, and today I mean, he learned so much with us, and obviously he was very, very smart, and um I mean, and hopefully we were remunerative enough for him that in 3 years, 3.5 years time, he kind of split away from us and started his own investment management journey as somebody who's managing other people's capital. So I I've never been happier, because I thought, or at least I think, that our platform has created one more very good analyst, or very good fund manager. To me, that still remains one of the things that I'm very proud of. And there have been earliest investors who are more like family, who kind of just put in 25 lakh, and at that point PMS limit was 25 lakh rupees. So they just put in
Correct.
25, 50 more out of pity कि अभी ये आ गया है तो इसको कैसे वापस भेजे, राइट? तो दे पुट इन मोर आउट ऑफ पिटी कि अभी इसको दे देते हैं 25 लाख. तो they over 6 years have done phenomenally well, and like today we are probably one of the only PMSs who our almost 60% of our capital is direct, and that's just word of mouth and referral. So I'm very happy that our clients think, and especially who have been with us over a cycle, think very highly about us, and kind of refer us to their friends and family. Those two things would probably be the proudest things that I think I've done at Equus.
Fantastic. Now tell me about some of the stocks which give you great satisfaction in your journey as a fund manager. I know, but I would like others to hear from you.
Our, I think the first, and obviously every journey needs a great start, otherwise the journey is delayed or journey gets stopped in between, right? The biggest impetus to our fund was essentially given by the first stock that the first stock which became 5x for us in a small period of, I think, a year and 3, 4 months, was a company known as Avanti Feeds. The company used to be the largest shrimp feed manufacturer in the country, and they had significant moat over their second largest competitor in terms of yields. We actually did a lot of legwork going to Nellore and going to some of the shrimp farms, and understanding why that was happening, and all of this, like, very high ROE company, 70-80% ROE company, was available at like 12 times current year earnings, right? So you couldn't lose much, and the earnings over a year and a half went up like two thing becomes 4, 5x. It just gives you two things, right? It gives you courage to do things differently, because at that point, and even today, I don't think many people own Avanti, and at that point though, definitely nobody owned Avanti. So it gave me the confidence key, the process is right, what we are doing. I mean, I mean, it can happen that sometimes we may go right or wrong, but process wise, structurally, things look okay. And you should continue doing this. And B, it gives us a fillip to go out and and as a small entrepreneur, every day is a challenge, right? Every day you're thinking whether I'm doing the right thing or not. It just gives you that self motivation that you can keep doing this. Someday things will work out. I mean, and which is what kept us going, right? We hit 100 crores after 4.5 4 years and 3 4 months of our existence, but the next 500 crores took less than 2 years. But the motivation to just keep going, even when you're not doing well, is small things like these. Yeah.
Fantastic. Would you like to talk about some other stocks which you really enjoyed owning or buying, the process, something that gave you a
uh,
real good feeling?
Alkyl amine. I don't think we are really grateful to the promoters of Alkyl amine. This was one stock where it was an accident, right? We essentially stumbled upon Alkyl amine because we were researching Balaji amine. After researching,
Correct.
talking to the value chain, we realized Alkyl amine is a better company, and the new plant in Dahej is going to come on stream. And the whole company, which was doing 60 crore PAT without the new plant, was available at 700 crore market cap. And
Correct.
after the new plant, they
Correct.
can possibly do between 150 or 200 crore market cap. So it was a no-brainer. And we made it like a 7-8% position. So we did our work, and we met channel partners. We met the largest distributor in Hyderabad. We went to see the plant. We did all of that legwork. But to make an extremely unknown company like Alkyl Amine as your top holding at like 9%, and it became like a 6x, and let it run till it became like 22-23% of the fund, and not cut your position just because it has gone up. It took a lot of resolve. It took a lot of, in my mind, it just took a lot of courage for it to become like 22%, 23%, and and continue to own it. Eventually, we sold it when it just became so large, and it became extremely expensive on irrational earnings.
Correct. I think it became overwound and illiquid. Both happened at the same time. And probably the rest is history.
Yeah, I sold at 7,000 crore market cap, I think, or 8,000 crores. It hit the peak of 22,000 crores. So imagine, like, every day is a struggle after that, right? Because you sold at 6 7,000 crores, 22% of your
Correct.
portfolio, and it becomes 3x
Correct.
after that in next 6 months. So you are left scratching your head that did you do the correct thing or not?
You're all, anyway, after you sell, everything looks, different. Right? That's also there, right? You think that that's a reasonable valuation to do. The market thinks otherwise for its own reasons. Then you
I
have to
have
deal with.
all I have always thought that I will be early to buy, which still remains my philosophy. I buy out of favor stocks today. I'll be early to buy and I'll be early to sell. I don't want to eke out the last 30-40% in a company. If I think something can be 4x, or 5x, I'm happy at 3x, and let somebody else make the last 50%.
What is your sense of how the market looks now?
So I have a slightly different perspective. I think market looks, at least the space that I am in, the market looks really, really good, right?
Okay.
Because you have had 2 years, 1.5 years rather, of stock prices which have corrected significantly in some of the cases. And again, I'm biased here. I have a lot of bias because I'm generally very optimistic in life. So, but what we have seen is stock prices on an average have corrected 20-25%. And I'm not talking stocks which went to 100p and 200p. I'm saying stocks which went to 30p on normalized earnings have now become
Okay.
20p, 21p. And what has happened is the margins have got crushed because of raw material in last 2 to 3 quarters, I think both of those things are kind of reversing, and you will see two things happening. You will see margin expansion in a lot of manufacturing companies and consumer companies and discretionary companies over next 2 to 3 quarters, and which will also be followed by some bit of PE re-rating, because I think we are done as far as inflation and rate hike. I mean, I don't know. I'm not a macro analyst, but whatever data I look at, it seems that the peak inflation is behind us. So there is real uh, no real reason to keep increasing rates. So a pause in my mind is also like a pivot, and who knows where the see I what I'm buying today, I'm going to sell 2 or 3 years out. There is a very high or reasonable likelihood that when rate hikes stop 2 years out, rates will be lower than today. So you will see earnings which are better, and PE which will be better because rates will be lower. So that's my simple thesis, how I think 2 or 3 years out, especially in a lot of companies in manufacturing and discretionary and auto, etc., etc.
What is your view about the specific thing about mid cap versus small cap? Because mid cap has become just a very small subset of companies, whereas small cap is a very large subset relatively. What is your sense about this relative potential in these two categories?
So I don't, and you know, Sham, that I don't think mid cap, small cap, right? I just think companies. I mean, mid caps generally are much larger companies which are greater than 12, 10 or 11 or 12,000 crore market cap. So I mean, that's not even our territory, right? I mean, we think
Okay.
we want to buy, and we are biased towards it. I've made all my money buying companies which are 500, 800, 1500, 2000, 3000 crore market cap. So जब तक कंपनी 10-12 हजार करोड़ होती है तो हमारा तो बेचने का टाइम आ जाता है, राइट? तो उसके बाद तो बिग पीपल लाइक म्यूचुअल फंड एंड श्याम शेखर बाइज. So we to buy small companies, and again we make our money or we make our alpha that way. So I have bias towards small cap also because I think they are extremely under researched and under owned, as we mentioned, because of the AUM constraint and the construct that is there today. So that's how I think a large alpha can only be made, and I'm talking large alpha. And obviously there'll be some periods where you make 2-3%, but when I talk large alpha,
Okay.
I talk years where we make 50-70% higher than the index, right? That can only happen if some of your stocks become 3-4-5x and you have like 7-8% allocation, right? So
Correct.
that can only happen in small caps. I doubt a 15,000 crore company can become a
So you
7
are looking at
8,000
the
crore
next
market
2-3
cap in a
years
year.
becoming a very, very happy hunting ground. You are looking at the next 2-3 years to be a very happy hunting
I
ground.
think it is happy hunting ground today. I think 2 years
Today.
out, some
Okay.
of them will not be
Then
available at
for
that PE.
no, I'm not saying it is not today. I'm saying that you're looking at the next for the next 2-3 years. I think I
Yes,
missed one word out.
yes,
Uh,
absolutely.
Great. There are a lot of friends in this spaces, so I'm thinking of looking if some of them would like to ask some questions. Anyone would like to ask questions, you can just open up and I'll open the thing for you. Any request to ask any questions to Viraj?
To Shyam Shekhar sir and Viraj sir. My name is Karthik, sir, and I would like to ask a question that, sir, like you mentioned, Viraj sir, that you started your equity investing journey as an analyst and then became an investment manager. Sir, so my question is, how would you advise some young professionals? So I'm a chartered accountant, but I'm mostly into audit. I'm 30 years old. So if I want to make a transition to equities and investing, and I've been a personal investor since 2014. So I have built my portfolio, But if I want to take a professional journey into investing, what would be your advice?
I'm a wrong guy to take advice from, because I've done all irrational things. I left a $6 billion fund to join a very small fund in ValueQuest, and when ValueQuest became reasonably big, I joined and started on my own. So I'm kind of a wrong guy to take advice from, but I would say the best entry place in this market is through becoming a sell side analyst, yeah, because the positions for a sell side analyst are far more than buy side analyst. Um, and then you have to do work which will be appreciated by buy side fund managers, and that is the door. That's a traditional door through which you become an investment manager. Now, obviously, you can take like, I also know people who are good investors themselves, and they write about their thesis to some of the niche boutique PMSs, and not mutual funds but boutique PMSs and family offices, and they kind of hire such people, right? And but that's luck of the draw. You have to keep trying. You have to write to probably all the 20, 30, 50 PMSs, boutique PMSs and family offices, and some might give you a break. So that will be the non-traditional way to go about this.
Yeah. Thanks, Karthik. I'll move to the next speaker.
Yes, sir. Fine.
Pranav, you can ask a question.
As you mentioned right now, a sell side analyst role, and through that, do you get opportunities to network with buy side managers? And if yes, then how should one look at it?
Of course, I mean, your clients are all your buy side fund managers and analysts, right? So, I mean, if you work in a decent sell side, the opportunity is galore for you to talk to buy side guys. The amount they'll interact with you will be a function of how smart you are and what value add you do. So, I mean, the opportunities of a sell side analyst are a lot to interact with buy side analyst, and kind of, and the opportunities don't come every day, but to make sure that you impress enough to that whenever an opportunity does come through, you'll be one of the names they'll remember. And that is exactly how I made my transition from a sell side analyst to a buy side analyst at Franklin Templeton.
Right, sir. And to get into sell side, what qualifications? I mean, CFA. Apart from CFA, what do you suggest for a beginner, for a fresher
uh,
graduate?
I think a CFA or an MBA is enough. I don't think you need any. You just need to have. You just need to know how to read annual reports, understand companies, and do the hard
Basically,
yards.
an analytical aptitude.
Yes,
Analytical aptitude.
I would think so. Yes.
All right, sir. Got you. Thank you.
Thank you.
Thank you, Pranav. Thank you.
Hello.
Yeah, go ahead.
Yeah.
Ask your
Hi.
question.
Hi, Viraj. I have just one question for you. Looking at current situation, how do you handle big drawdowns in your small cap stocks? Because that becomes quite a big challenge when you are handling a fund. So that is only my question.
So you don't manage. I mean, the idea is, if you think something is good at 100, and it can fall to 70 after you buy it at 100 or 90, the only thing you should probably do is if you think the market is bad, kind of stagger your buying over a period of, if let's say you were going to do over a week, probably stagger it over a couple of months or 2 3 months. But honestly, there is no way you can avoid drawdowns. Drawdowns will happen. It is part of the journey. It is In programming language, as they say, it is not a bug, it is part of the system. So you cannot do anything about it. The best thing is not to think about it, not to let it affect your rational mind, because what tends to happen, something goes down 20%, you suddenly start questioning your thesis, your philosophy, and something goes up 20%, in spite of it not being a correct decision, you will not question it, right? So let it not affect the way you think. And it is tough. I'm not saying it's easy, because you will have clients, so you'll have to make them understand, so you'll have to communicate. So I write a letter every quarter. All my 25 odd letters are there on my website. So you keep writing to them, and you tell them this is how we think in terms of probability, and some things may still not play out. But the idea is, you this is don't try and sidestep, because you will not be able to, especially when you're managing big money, right? I mean, if you're managing 5 crores, and let's say a stock, in a stock you have 30 lakh rupees, किसी का खराब रिजल्ट आया तो आपने दूसरे दिन बेच दिया, right? अब if you have 20 crores of that stock, तो आप बेच तो सकते नहीं, right? So you own, the only way to for you to make big money is to think 2 or 3 years out, and think what this potentially could be worth 2 or 3 years out. And in between that journey, from, like, if you want to go from Ahmedabad to Delhi, it may happen from Ahmedabad first you go to Bombay, and then you go to Delhi.
Yeah, got it. Thank you.
Any other questions? Let me see. Anyone else would like to ask any questions to Viraj?
Sham, there are some 7 odd requests. Should I allow them?
I can't see them.
I can.
I'm getting them. Yeah, you please do.
Okay. Yeah, Abhilash, can you go ahead?
Question is to both of you. Like you were talking about the you were talking earlier about the process how you made. You used to pick around 1,000 to 2,000 crore market cap, and you made some 4x or 5x. Till that part, it's okay. But if you is there any this thing like where you feel that still the stock can perform in the coming ahead from the 10,000 crore market cap?
No, it can, right? I mean, I can give you an example where we actually sold out, and the company continues to do very well. And to this date, I still regret selling it. It's a company known as APL Apollo Tubes. We bought that company at like 1700 crore MCAT. We sold it at 10,000 crores. Today, I think it is 35,000 crores. And it continues to deliver strength to strength in terms of volumes. So, till you see the company gaining market share, company executing much better than what they said, I think you should continue to hold it. It's just we find it difficult when valuations become 30, 35 times, and I just don't have the nerves for it. For an individual investor, I think it's a little easier to just keep holding what's working. Easier said than done, because as it becomes expensive, there is always this trade-off in your mind that I can sell this at 30p, buy something which is probably in quality a little worse, but at 14, 13, 14p, and make that arbitrage, right? Usually, I've seen that's not worked out.
Sham sir, any points from you, your side?
No, I didn't understand. What? Abhilash didn't understand the last part.
So I was telling this thing. So you would like to churn if something becomes expensive like 35, 40 PE,
Yes.
and you would like to
Yeah,
go to a preference where it is available cheaply, like maybe another stock
Yes.
which can repeat your history, like the earlier one.
Yeah. So yes, we try and do that, but my experience with that has been very mixed, to be honest. whenever I've sold things which have done well for us and they become expensive, market kind of rightly values them expensive. Um, for me, it's been a mixed bag, right? So let's see. I mean, I guess we all keep learning over a period of time. So I do what you say. I'm just not sure that's the best outcome, though.
Shyam sir, your views on this particular question, like if you can.
Sorry, what did you want to know from me?
The same thing, Sham, in terms of when things become
About
expensive.
selling?
Yeah, selling.
No, see, it's relative. You have only limited amount of capital. You enjoy investment ideation. So sometimes when something becomes very expensive, we leave it for others to make money. That's all. Simple.
Yeah, so
There is no regret.
thanks from both
Yeah,
of you.
that's all.
Thank you.
Samit, you can
Yeah,
go next.
Thank you. Got it.
Oh, thank you for the opportunity. So, as a value investor, we like to buy businesses that worth 100 rupees and trading at the valuation of a 40 rupees. But what if business worth 100 rupees and trading at the valuation of 1000 rupees, 5000 rupees, 10,000 rupees? Then doing short selling is also part of a value investing. What do you think about that?
I have no balls and I have no stomach to do shorting. I've never shorted anything in my life because I know my mentality. I will not be able to sleep at night. Probably I'll get a heart attack in a week. So I don't want to ever do shorting. It's just not me. Not that you can't make money. I think you make Rakesh used to say you make the fastest money in shorting. It's just you need balls of steel shorting, right? And I don't have balls of steel.
Okay, Sham sir, would you like to add?
Short. No, here, see, why do you want to sell short? Because you feel the valuation is too high. I think when you do that, there are some mistakes which you make. One is you make it very personal. And the second is most likely that you are pitted against somebody who's actually created that valuation through methods which are not really what you can really do or much about. So I think that it eventually turns out to be a case where you are trying to steal from a thief, which I think is not a very honorable profession.
Your voice is lagging, sir.
No, see,
No,
what happens is somebody manipulates the stock price, takes it up. So when you try to go short on such a stock, you are trying to prove that they are wrong, right? I
Yes.
think that you end up fighting a war against manipulation, which I think is not worth doing. It's not enjoyable. Certainly not enjoyable.
Okay. Thank you for answering my question.
Karthik, you can go next.
Good evening, sir. Thank you for the opportunity. So my question is that while evaluating businesses, do you have any sort of checklist that you won't buy X, Y, or Z or capital intensive kind of businesses, or do you like first figure out which portions of the market are cheap and then try to find businesses in those?
No. I have a very open mind. I have bought all kind of businesses. I have also bought a semi commodity business. I actually think market is not black and white. ऐसा नहीं है कि ये FMCG company है और ये commodity company है. All companies are commodity and all companies are kind of not commodity, but I would say all companies have their own ups and downs. HUL might have the least difference in ups and downs, and a Tata Steel might have the highest ups and downs in terms of the P&L. But all companies have their own shades of gray in terms of how their earnings pan out. So I don't have a fixed checklist. Okay, we generally keep a very open mind about it. Though we have not bought a lot of things we don't understand. So I've not bought an IT company ever in my life, right? Which is like over 13 years, I've never bought an IT company. Or I've never. So there are things which are my white spaces, but not to say that I will not. I mean, I'll get an analyst who understands IT very well, so we might end up buying one. But no, we generally keep a very open mind about it.
Okay, sir. Thank you.
Madan, you can go next.
Hi, am I audible?
Yes.
Yeah, I have two questions. One is it's often easy to make the first buy of a stock. Like, what is the conviction that you need to average it up as the stock keeps going, especially if the stock runs up very fast in a short amount of time? And second question is more from, since you're a small and mid cap investor mostly, so what's your overall allocation to equities like? And if you could talk about your overall asset allocation and how do you manage periods of drawdown? Is that are you managing it through asset allocation, or it just that you are going through the drawdowns?
No.
Thanks.
I'm not a mutual fund CEO. No, I don't have to do asset allocation. I have to maximize my returns over a 10-year, 15-year period. Full stop. I come from an extremely middle class background where my total net worth was few lakh rupees in 2008-9. So I don't have to think about restricting drawdowns and that all I don't do. My money is all in small caps in the PMS. The only other equity class I have is I have shares of I bought my first house recently, this year actually, after being in markets for 13 years. And that too, like I was kind of forced into it
No, I'm not
by
able
my
to hear
family.
anything.
Hello, can you hear me?
Yeah. Yes, you're audible.
So,
And the first question, your thinking process about averaging up.
yeah, averaging up is great. I mean, whenever I've averaged up, generally it's worked out to be great. Whenever I've averaged down, it's just been a miserable story. I mean, I've generally been, I mean, I don't like to make generalization, but I've been wrong 75% of the time when I've averaged down, and I've been right 75% of the time when I've averaged up.
My question was more about like when a stock runs up, right,
So,
in a
so,
short amount of
so,
time.
so that you don't chase. I don't chase. I'm not a chaser. But let's say stock goes from 400 to 600, but over next 3 quarters, earnings are also up 30-40%. So a 15p stock is becoming 17, 18p. I'm okay to buy. But a 15p stock becoming 25, I'll not buy. So it's a function of what is still the return that is on the table. Not happy to buy an expensive stock. But if PE goes up, earnings go up, P generally is in the same range. I'm not saying it has to be 15 or 12, but let's say you started buying at 13, 14, it is 17, 18. I'm okay buying it.
Sure. Thank you.
Yeah, Virat sir, this question is for you. So, you said like you explore
Raj,
some
you're
niche
able to hear
areas
me?
like.
Yes, Sham, I can hear you.
Am I audible?
Yes, I can hear everyone. I can hear Vin
Yeah.
also
See,
and Sham also.
yeah. Virat, like the question is regarding like India being mostly like unorganized. You said like you operate in some niche like you have own Avanti feeds like shrimp feed, which is primarily based in Konaseema and Ellur belt, right?
Right.
So in these like niche areas, when you go out and explore the value chain and try to figure out the moat, like how do you exactly try to understand, like this some sort of an industry does well, but like take defense for example, there are very specific subsystems and something like electronics and all, where the companies have significant moat. The sector does well, but you can't differentiate some specific uh, ideas to say like this company might do well in that sort of like the industry does well, but you can't figure out the value chain. What exactly use your rationale behind figuring out companies
So,
in those areas,
so then you.
and also yeah.
So let me answer first question. So you don't buy. We have looked at a lot of defense companies. We actually visited 2 defense companies. कुछ समझ ही नहीं आया कि ये क्या अलग कर रहा है दूसरे से. ठीक है. तो you don't buy. You say too hard.
Okay, and any specific sectors that you're looking at having 2026 27 in mind?
Yeah, 26, 27 तो पता नहीं. But see, there are sectors which there will be tailwinds in terms of the sales growth. and where the margins today are not looking pretty. So I publicly written about our company in tire sector, where I think the sales growth is kind of structural, and the margins today are like at a 5-7 year low. You can look at that sector. There are so many sectors where margin pressure today exists, but the market share of some of the larger guys are increasing. Those are the sectors to look at in my view today.
Yeah, thank you.
Jitendra, you can go ahead.
Hey, hi. Am I audible?
Absolutely.
Yeah, you.
Hi, Viraj. Hi, Shambhai. Okay, so my question to both of you, I would like to know your biggest mistakes. One of omission, one of commission, and some explanation as to why you did what you did, and what were the lessons learned.
Yeah, you two are asking like a potential investor.
Viraj, you want to go first?
No, I answer this question in all my potential investor meeting. So I have a rata answer. But no, to be honest, I think our biggest mistake, and we actually wrote about it in one of our letters also, was TCPL packaging. It was an 8% allocation, I think, where we lost 40-45%. And I think we did all the things right. And again, if I go back in history, would I still repeat the same mistake? I would, because it was doing all the right things. It was putting up the capacity, it was gaining market share, it was increasing EBITDA per kg, realization per kg was increasing, EBITDA per kg was increasing from 6 rupees to 18 rupees, ROEs were mid 20s, dividend payout was great, promoters was decent. Just the cycle was very wrong, yeah, because we were at the top of the cycle, highest margins, and then the raw material went through the roof, and the volume growth declined, and the EBITDA halved, and the profit just vanished. So yeah, we lost boatloads of money in that. Yeah, we lost, I think, 3% of the firm, of the AUM. That's, to my mind, that's my biggest mistake. And the biggest learning from that is, whenever something seems too good to be true, it is generally not true, and it is at the peak of the cycle. Even though you may think it is a structural story, but it may be the peak in hindsight. So don't enter anything at the absolute peak margins, peak P, because you will regret it later.
Got it. And one mistake of omission as well.
Astral, I just talked about it. It became 100 bagger after I let it go. You know, Astral ka office was next building from the office I worked in Equirus. Matlab, next building. How stupid can you get? It was next building. I could meet the CFO. He was a very lovely chap by the name of Hiranand. He's still there as the CFO, Hiranand Savlani. He would tell you all the things about the company and how they are appointing dealers and why they are becoming distributors. And I still went ahead and bought Supreme.
But Rajbhai, tell me, out of that 100x, how much would have been because of the earnings growth, and how much because of market loving it? And
No, I still think probably 20x was still due to earnings growth. Yeah, 20-25x was still earnings growth. Yeah, I looked at it when market cap was, I think, 400 odd crores. Yeah.
Wow.
I did not buy a single share, by the way. That remains my biggest mistake.
And lesson learned?
Pata nahi yaar. Matlab, difficult to say, right? I mean, I don't know. I don't know the lesson out of it. But if somebody is doing a great job and taking market share away, creating a new category with somebody who's very good at it, like if you meet Mr. Sandeep Engineer once, you'll realize what kind of personality he is. You at least buy some shares, yeah. Like if I had even 1,000 shares, I would have bought later. But like तब तो I was very young and anchoring हो जाता है, right? मतलब क्या हो जाता है कि आपने 150 रुपए पे छोड़ दिया, फिर अच्छे रिजल्ट आते हैं 225 हो जाता है, तो आपको लगता है कि यार ये तो छूट गया, फिर 500 हो जाता है, फिर 1000 हो जाता है, फिर तो छूट ही जाता है. मतलब अगर मेरे पास 1000 शेयर भी होते ना, तो मैं 225 पे और लेता ही जाता मैं.
So get your foot in the door.
या एटलीस्ट बाय 500 शेयर्स यार. लाइक अगर किसी को मिलके लगे कि ये बिल्कुल फ्रॉड प्रमोटर नहीं है, अच्छा काम कर रहा है, ठीक काम कर रहा है, बैलेंस शीट क्लीन है, तो 500 शेयर तो ले लो यार. क्योंकि 500 शेयर लोगे तो यू विल ट्रैक द रिजल्ट्स. व्हेन यू सी द रिजल्ट्स, कई क्वार्टर अच्छे होंगे, कई क्वार्टर बुरे होंगे. बुरे क्वार्टर में इट विल नॉट हर्ट योर पोर्टफोलियो क्योंकि आपके पास 500 ही शेयर है. अच्छा क्वार्टर होगा तो आप कॉन कॉल सुनोगे या उससे बात करोगे. अगर कॉन कॉल नहीं कर रहा है तो समझोगे कि क्या अच्छा चल रहा है धंधे में. फिर अच्छा लगा तो यू कैन स्केल अप योर पोजीशन. सो अगर कोई आदमी ठीक लगता है ना, तो अभी मैं वो गलती नहीं करता. अभी मेरे पास 250 कंपनी के एक शेयर है.
Brilliant.
पर एस्ट्रल का अभी भी एक शेयर नहीं है.
Great. Shambhai, same 2 questions.
Yeah, are you able to hear me in the first place? I have some problem with my phone.
Yes, no, I can hear you perfectly
Loud and clear.
fine.
I
Loud
couldn't
and
hear you
clear,
for the
Shyam.
last 10 minutes. Can you repeat the questions? There's some internet problem on my side.
No, question is same which I asked Viraj. One mistake of omission, biggest mistake of omission and biggest mistake of commission. Why you did what you did and what were the lessons learned?
See, there is one mistake which I would think I made, which is assuming that very large institutional investors do their homework. Okay. Especially in special situations. There is an assumption that you think that large institutional investors do their homework, especially when they lend big sums of money. I think that didn't work. What is the other one?
No, I said one mistake of omission and one of commission. So uh, this one probably is of commission.
Yeah, omission. What do you mean by omission? Where I missed something?
Something which you looked at, but you liked or you missed because of some reason you didn't
No,
didn't
plenty.
act.
There have been 2 instances where I have looked at an idea, got my conviction, kind of, very fast within a few hours, and completely forgotten about it the next day. It's completely inexplicable, but it's happened to me twice. Where you meet somebody or you talk to somebody in a circumstance, and you talk animatedly for 1 or 2 hours, and then next day your life takes a totally different turn. Some other event, some other circumstance, you completely forget about it. It's happened.
So the lesson learned from first one is probably that never take anyone on face value, and second one is always take notes.
Take notes and inform your assistant that what needs to be done the next day. Immediately, like make a note to yourself or tell your assistant that tomorrow this has to be done. Record it somewhere so that it goes on. Otherwise, in the first instance, I met the person at the most unlikely place. So next morning, it was a Sunday morning. Monday morning, I forgot. The second instance, I made up my mind and everything. And the next morning, I was attending to suspected COVID of somebody. So I completely forgot. And the opportunity just went by. And these are all fairly large opportunities where, the stock moved 15-20x within 12 to 18 months.
Right. Thank you so much, both of you, for taking my questions. Thanks a lot.
So Viraj, you're allowing anyone else to speak, or we'll close? It's going to be 8:30.
Just one last, Manish and Naveen. 2 last.
Viraj?
Yeah. I was just saying Manish and Naveen, 2 last.
Yeah, this is Naveen. I'll go first. 2 quick questions, Viraj. Any advice for an individual investor managing family money? And then the other question is any books that have shaped your thinking in a big way?
No, yeah, all books put together. I think more than books, I've realized the more good investors you meet, they shape your thinking much better because each market is different. What happens is that most of the books are written from American perspective. तो इंडिया में ऐसी कंपनीज ही नहीं होती जिसके बारे में वो किताबें लिखी जाती है. तो वो प्रॉब्लम है, राइट? बिकॉज इंडिया सेंट्रिक किताबें ही बहुत कम है. तो मेरे को लगता है कि द बिगेस्ट टेक अवे दैट आई हैव रियलाइज्ड इज meet kick-ass smart people, meet people like Shyam and Ankit, Dwanil, Kiran, Rohit, etc., and they'll tell you how they think, right? So then you can say कि ये मेरे को समझ आ रहा है, ये मेरे को समझ नहीं आ रहा है. And some things just make intuitive a lot of sense and some things don't. So you just pick up what makes sense to you and move on in life. Sorry, what was the second question?
For an individual investor managing family money.
I think there'll be a lot of money which will be made over next 5-10 years, if you just get the stocks right.
Great.
I mean, I genuinely don't have any advice here.
Yeah. One small other question. From your experience, what is the hit rate of your picks which have become...
Experience, I've calculated it. From 2011, I've only made money in 51-52% of the stocks.
What percentage
so
would be
1 and 2.
Got it. Yeah. Got it. Thanks, Viraj. Thanks, Shyam.
Hey, Manish.
Yeah, hi. My question to you is basically, if you look compare fund manager versus an individual investor, what do you think advantages and disadvantages?
I think the biggest advantage an individual investor has is that he is not answerable. And I'll tell you how that is an advantage, right? For example, you are just sitting, आपने न्यूज़पेपर में एक रिजल्ट देखा, आपको अच्छा लगा, आपने एक एनुअल रिपोर्ट पढ़ी, आपने जाके खरीद लिए शेयर, ठीक है? अभी आफ्टर few quarters you realize it was a mistake, and half of these will be a mistake, so you sell out, like 20% loss, 30% loss, whatever. Those losses will not hurt you, but there will be some companies which will keep delivering results and you will make 5, 10, 15, 20x on them, which will generate the biggest alpha. But as a professional money manager, till you complete your work, you can't take such random bets. तो मेरे को तो टाइम लगता है, मैं एक कंपनी लेता हूँ, मेरे को 20 दिन लगता है कंप्लीट करने में, if I go the whole tilt. So that is the biggest advantage an individual investor has. He does not need any risk management. If a company is doing well, it becomes 10, 15, 20, 30, 40% of your portfolio. It's okay, no? It's a great company doing well, let it go. I can't do that as a professional money manager. So to my mind, that's the biggest advantage an individual investor has vis-a-vis a professional money manager.
Okay, thanks, Suraj. Shyam, your answer on this, because you had been in both roles again.
I think it's the same thing. Whether you do it for yourself or others, your responsibility is much the same. It doesn't change. It's the same thing. You do what suits you in one instance. You do what suits others in that instance. So you have to adapt to the person you are investing for. That's all.
Thank you. Thanks.
Viraj, for some strange reason, I'm not able to hear you while you speak.
I am able to hear you. And
are you able to hear me, Viraj?
Absolutely. I am able to hear you loud and clear. I don't know whether you are able to hear me. So we'll anyways finish the space, na Shyam? You can close the space. Hello? I don't think Shyam is able to hear. So anyways, thanks a lot, everybody. I was very excited to do this. And Shyam has been very generous to host this for me. Thanks a lot, everyone, for your questions. Hope to do this a little more on routine basis, probably once in 3-6 months, and do it more often. Yeah? Thank you so much. And still have any questions, just drop me an email or DM me. No problem. Thank you so much.
Thanks, Shyam.